Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. Today I want to talk about the real estate market here in London as LSTAR, the London St. Thomas Association of Realtors, released its monthly report this morning showing a few signs that the London real estate market is starting to slow down quite a bit. I've been seeing quite a few signs myself in day-to-day dealings as a mortgage broker. Seeing a few conditional offers actually be accepted on houses. Houses not receive as much money as they used to for over asking price, and the general value of houses actually starting to shrink down just a little bit. So today I want to briefly go over the top 3 signs that the London real estate market is slowing, and just kind of provide some insight into where we've been, where we're going, and what's likely to happen in the future. So the first and most obvious sign that the London real estate market is starting to slow down is the average price. The average price of a house in London has actually dropped for the 3rd month in a row, down to $617,000, which is quite a bit below its high of $642,000 that we saw in April of this year. Not only has the average price dropped, but the median price has dropped as well. So the median price meaning half as many of the homes sold were sold for more than that, and half were sold for less than that. The median price in London has dropped for the 4th month in a row. It hit its high in March at $600,000 and its low so far last month at $580,000. So just in the past few months we've seen a $25,000 drop in the average price of a house in London, and we've also seen a $20,000 drop in the median price in London. Now, these aren't dramatic drops, but they're consistent drops. So they're dropping consistently every single month. It's not like it's one slowdown and then everything pops right back up. We are starting to see a very gradual but very consistent slowdown in the market. And this is reflected by the second point, which is the median days on market. And when we look at median, that's where we half as many of the homes were sold over this amount and half are sold below this amount, but the median days on market has risen to 9. A few months ago, the median days on market, how long a house sat on the market before it sold, was 7 days. That's risen to 9 as of last month. It had risen to 8, I think it was 2 months ago, something like that, but we do see it starting to gradually go up from 7, 8 to 9. So there's houses are sitting for a little bit longer on the market. And finally, the sales to list price ratio has started to drop as well. So the sales to list price ratio, that's when you start to hear houses going for over ask. So if a house lists for $100,000 and it sells for $110,000, the sales to list price ratio is 110. Well, the sales to list price ratio in London dropped from June, where it was 110.6, down to 107. So houses are still going over ask, but when you see that combined with, when you see a drop in the sales to list price ratio, houses spending longer time on the market, and the average and median house price in London starting to drop month after month, well, I think after 3 months of this, we can start to say it looks like we are definitely in a slowdown here in London. Whether or not this slowdown will continue is it remains to be seen. Obviously, in the summer months, we do tend to slow down a little bit, and I think there's definitely a bit of buyer fatigue in London, as so many people are just kind of sick of having multiple offers go unaccepted, and kind of just want to enjoy the summer now that the lockdowns are at least mostly over here in London and surrounding area. Also, I think that Toronto's market starting to slow down might keep a few of those buyers away as well, which is also contributing to the slowdown in London. My own thoughts are that we really won't know what's going to happen with the market until we get to about September or October, and we start to know whether or not the government money is going to start to slow down, what our economy looks like once everything gets back to normal. The Bank of Canada recently announced that they'll be slowing down their quantitative easing program. The government has signaled, at least a little bit, their willingness to slow down the amount of financial support that they're offering. There does seem to be an intention on the part of the government to try to see if our economy can stand on its own without the COVID financial supports that we've been having. So I think once we'll know what the market is actually going to look like once all the supports have been taken away, and we actually can get a fully true idea of what our economy looks like in the wake of COVID-19. Now, it's doubtful that prices are going to go back to where they were pre-pandemic, when the average price in London in March of 2020 was $455,000. So it's unlikely that we're going to see a $170,000 drop in the price of houses in London, but we could see a continued slowdown as buyers aren't so much focused on getting that new house and getting more space, and we start to get an idea of what our economy actually looks like, and what this housing market can be supported by, with the economy back to at least semi-normal. But we'll have updates as those come out. Please do like and subscribe to get those updates, and you'll be notified as soon as they're out. Thanks for watching.